These next couple slides are a post that I did, I don't know, maybe half a year ago. And what I'm trying to do is I'm just trying to frame things for people in a very global kind of way. So this is the top. It's the chart starts. All these lines start at 0. They're all at the same spot back before the 2008 crisis. Okay. You can see the sell-off there, and that was the size of the 2008 crisis compared to how much all of these global indexes have grown since the top in 2007, 2008.
Oh, God.
And so when you look at this chart, you can see India, anybody who would look at this chart would be like, well, India crushed it, right? US, they did pretty well. Hong Kong, down negative 23% since that period of time. And so when you're looking at this on these are the major global markets that are out there. In the index that I used for Europe, people can go to the SXXP and kind of see what basket that falls into. But there's all your major companies over in the EU are in that basket. All right. So what's important?
I'm looking at this going, but the previous chart looks from about 2020 looks the same.
Yes.
It compares to the money printing chart. And this is what happened in Venezuela when they hit hyperinflation. The first thing that happened was the stock market accelerated in growth. Because
there's scarcity in the shares. Yeah. If the company's making money, they don't have to debase the shares. If they're losing money, they've got to debase the shares and come up with cash so that they can keep the thing living. But if you're dealing with businesses that actually make money, they're not going to debase the shares, which means that's a scarce thing to own. And that's why you're seeing people run to the equity market, and they're going to continue to run to the equity market in fiat terms on a long enough cycle. You're going to see equities melt up in dollar terms and any fiat currency that you want to say. It will continue to melt up with enough time. Right now, it sure don't seem like it, but on a long enough time horizon, you're going to see it continue to melt up. So the thing that's important on this chart is this is the performance in local currency terms.
Okay.
So the ruble is for India, right? That's in ruble terms. For the US, that's in dollar terms. Rupee. So, yeah, it shows you how much of an amateur. Just sorry, I'm not a big Indian currency person. Japan, you got the yen. That's the performance in yen.
Yeah.
Okay. So let's go to the next slide.
I'm assuming everything's down against the dollar in this next one.
Well, we'll see. Go to the next one. There you go. This is the same exact chart, but I put every index in dollar terms. Okay. So now you can see India still did pretty well at 82% from the top before the 2008 meltdown.
But what does this show? Is that their currency isn't performing?
It's just putting it, when you're looking at that previous chart, you don't know. Let's just say that in India, they heavily debase their currency against the dollar. That could be a negative performance as you go from one to the other. Now, obviously it wasn't, but it's down significantly from, what was it, 180?
But interestingly,
go back one. It was 200. So it's 120% lower when you put it in dollar terms.
So, but interestingly, with Hong Kong, it performed better.
Because they had a very slight improvement relative to the dollar over that period of time. And some of it was, if you dig into the numbers, it's almost a near perfect because of them pegging to the dollar.
Interesting.
Okay, so go to the next. Okay, so we're looking at this. So let's go to the next slide. And so I say, but the dollar itself is changing. Okay, so when we put it all in dollar terms, that made more sense.
Yeah.
But what if the dollar itself, the thing we're comparing it to, is also shape-shifting and morphing and different from the top of the market in 2007, 2008 till now?
Yeah.
And it is, because this is the chart. This is dollars. If you would go back and you'd look at 2007, 2008 dollars and you compare it to a 2022 dollar, this is the difference. And it's 182%. There's more in the system, Yes.
Next chart, you've accounted for that.
Yeah, so we'll account for that next. So going back to the Monopoly example, right? We're playing the game over some period of time.
Mm-hmm.
And if we're using that currency in the game, and we started with 100 units in the game, but at the end of the game there was 200 units in the game, how do you compare it? How do you compare the moments in time as that currency itself is changing as far as returns and yields go? So that's what we're going to do next. So let's go ahead and jump to the next slide. And now here's our performance when we go back into each one of these. And this, I think the chart was in weeks. So in a weekly term, in a discrete weekly term, we take those adjustments to M2 to each one of those indexes around the world. And this is the performance from the top, not from the bottom, but from the top of the 2007, 2008 crisis. And this chart's probably 2-3 weeks old. But at that moment when I captured it, this was a negative 1% return for the US. Now think about this. You're a business creating economic value for society. You're retaining profits. You're a life form, right? You are taking energy, turning it into something that the market values. And your return in adjusted to 2007, 2008, right there at that mark, dollars, you've returned negative 1%. You can see how everybody else fared.
Yeah.
So go to the next one. I had to put this slide in here. This is totally unfair. And if people are looking at this and saying, "Oh, that's not even fair, Preston," I agree with you, but it was just fun for me to do, so I put it in there. Okay, go to the next slide.
Just for people listening, that's Bitcoin up 111,000%.
I just had to have fun.
Yeah,
right?
I wish I'd bought some back then.
Now, I wanted to zoom in here. Okay, so this is the same chart that we were looking at, the M2 adjusted.
Yeah. And
let's look at from COVID till now. And what I think you're starting to see is many credit cycles that are completely dependent on just Fed debasement and inserting this fiat into the system. It's accelerating. And an example I've used a couple times and people keep teasing me about it, but that's fine. I think it's a good example, is just childbirth. So when a woman goes into labor, the contractions are far apart. They're happening, every 10, 20 minutes, something like that. Maybe even like a half hour. They're not real strong, but they're strong enough that she's like, hey, get me to the hospital. You get to the hospital and maybe now they're every 10 minutes, she's having contractions. They're getting stronger. That she's getting uncomfortable. She's saying, hey, get me the epidural. And then you start getting up to like the final moments of the birth. And the contractions are so absurdly strong and aggressive, the magnitude of those contractions. They're happening every minute, every 30 seconds, whatever it is, but the frequency is picking up. So the magnitude and the frequency are getting more powerful as time goes on, more energy. So when I'm looking at this chart and I'm looking at these, everybody's familiar with a business cycle and they say, oh, it's 5 to 8 years is the typical business cycle. That we saw it earlier on the first slide that was up there. We were talking about the short-term business cycle. I think what you're seeing now is their actions and their manipulations of adding credit and adding units into the system is becoming so pronounced and at such a high frequency and at such a high magnitude that you can start to see it graphically representing itself on the chart. So we're going to zoom into that circle that's there. So go ahead and hit to the next slide. Okay. So there's the drop. There's the COVID drop.
Uh-huh.
You saw the stimulus back on the M2 and the central bank balance sheets of like how much stimulus was added into the system.
Yeah.
This is M2 adjusted, okay? And you can see that in the US, which is the dark blue line there, the third one down, you can see we barely got to above neutral from where we were at pre-COVID. Barely got there. And now you're negative 16, 17% down from before the COVID drop. And so Dalio, he'll do interviews where he's saying that you're pushing on a string, or the quantitative easing is having less of effect as you go further into time. And I would tell you this is graphically representing that talking point that he often says. And then you can see, Hong Kong and China, the GXC there is China. You can see they're just getting crushed in this last cycle when you M2 adjust it. And so they have to step in. They're going to have to step in again. I think it's coming within the coming 12 months that they're going to have to step in aggressively. And it's going to have the magnitude of their response is going to be huge. And I think that if you M2 adjust it and you're looking at how much they actually capture out of that, you're going to see it's even harder. It's getting harder and harder for them to stimulate any of this. And so that was really the point of this slide.
But that is straight Weimar Republic.
Absolutely, yeah.
So do you think hyperinflation is coming, or is a possibility of coming?
So when people say the term hyperinflation, to me, it's against what? What are you saying it's hyperinflating against? And so we've had hyperinflation against Bitcoin for a decade.
Okay. But I think that almost real world effect of the money you're earning collapsing, and you don't have Bitcoin, because plenty of people don't understand it, won't have it. That complete collapse of your money, similar to what happened in the Weimar Republic, or even happened in Russia, where people were just having to sell anything they could just to buy. Like, do we see disaster scenarios like that?
It's too difficult for me to be able to theorize what that
my assumption is
like.
Is if they keep doing this, that comes, because the playbook's there, and when money dies, it's whether they stop doing this and they accept.
Well, I'll say this. I think that the scenarios where you see this get really bad are the locations where they don't have access to Bitcoin, or they're not able to use that as a unit of account for whatever reason,
or no reserves.
Yeah.
Is something like Sri Lanka foreshadowing what's going to happen in other nations? I mean, Turkey's pretty bad as well now. Yes. That's a developed nation.
That's exactly what's foreshadowing. Yes. So if those locations have access to Bitcoin, and people have, most people have smartphones, the government hasn't done anything crazy with trying to prevent its use. I don't know how they could, to be honest with you, really kind of shut it down in any kind of way that they can actually enforce. But let's just say that the nation doesn't have it readily available, or have a lot of plumbing to incorporate it. They're going to struggle the most with the transition.